This video is a review of 7 & I Holdings Co.'s fiscal year 2024 first half, period from March 2024 to August 2024. 7 & I Holdings is a Japanese retail holding company, best known for owning and operating the global convenience store chain, 7-Eleven, along with operating supermarkets like Ito-Yokado. It was formed in 2005 as a parent company to oversee a variety of retail operations, including convenience stores and supermarkets. 7-Eleven is the largest global convenience store chain, with locations in Japan, the US, and other countries. Ito-Yokado is a major supermarket chain. In Japan offers groceries, clothing, and household goods. And recently, Canadian convenience store giant alimentation Couche-Tard has been trying to take over 7 & I Holdings. But 7 & I aims to focus its management resources on its core convenience store business to resist takeover. I will explain more details later. First half consolidated results. Highlight. Revenue for first half of fiscal year 2024 increased 8.8% year-on-year to 6,035 billion yen. However, operating income decreased 22.4% year-on-year, and net income decreased 34.9% to 52.2 billion yen. In addition, the company revised its full-year plan. Revenue forecast increased, but net income decreased 44.4% from original fiscal year 2024 forecast to 163 billion yen, 27.4% decrease from previous year. Revenue has increased, but profits have fallen significantly. It is a tough situation for 7 & I Holdings. Reasons for difference and revision. Here is the reasons for the decrease in profit. Despite the North American economy staying strong through the first 6 months of 2024, high inflation and interest rates made people, especially middle and low-income earners, more careful with their spending. As a result, 7-Eleven in North America saw fewer customers than expected, leading to lower sales and profit. On top of that, the company had to deal with a big loss of about 45.9 billion yen because of closing its subsidiary, Ito-Yokado online supermarket. Due to these factors, the company's profit was lower than they had predicted. Because of these unexpected results, they also revised their financial forecasts for the rest of fiscal year 2024. Segments. 7 & I Holdings is divided into several key business segments. Domestic convenience store operations. This segment focuses on the management and operation of 7-Eleven stores in Japan. This is one of the company's most important segments and contributes significantly to its revenue. Overseas convenience store operations. This segment focuses on the international expansion and management of 7-Eleven stores outside Japan, primarily in countries like the United States, Canada, and Southeast Asia. The Overseas CVS Operations segment plays a critical role in 7 & I Holdings' global strategy, with a focus on expanding the 7-Eleven brand internationally and adapting to local market needs. Superstore operations. This segment includes Ito-Yokado, which operates supermarkets offering groceries, clothing, and household goods. This segment caters to a broader range of everyday shopping needs. Financial services. This segment includes 7 Bank, which operates ATMs primarily located in 7-Eleven stores and provides various banking services. Others. It includes e-commerce, restaurant operations, and other related businesses that complement the company's retail activities. Operating income of Overseas Convenience Store Operations segment decreased significantly. It affected consolidated income and came out to decrease in fiscal year 2024 first half. Takeover bid by alimentation Couche-Tard. In August 2024, 7 & I Holdings had received an acquisition proposal from Canadian convenience store giant alimentation Couche-Tard for approximately $39 billion, or more than 5.8 trillion yen. However, 7 & I responded to Couche-Tard, stating that it could not accept the proposal, claiming that the acquisition amount significantly underestimates the value of the company. On October 9th, Couche-Tard had increased the acquisition amount by about 20% from the previous proposal to about 7 trillion yen. SVNDY's stock price rose against the backdrop of expectations that the acquisition would be completed, and the current stock price is 2,292 yen per share, more than 30% higher than in mid-August before the acquisition was revealed. On the 10th, SVNDY Holdings announced that it will sell the majority of its shares of supermarket and restaurant businesses and remove them from the list of subsidiaries. The aim is to change the diversification approach and focus on the profitable convenience store business to increase the company's value in order to counter a takeover proposal from the Canadian company. According to the announcement, on the 11th, an intermediate holding company called York Holdings was established to consolidate grocery stores and non-financial businesses, such as Ito-Yokado, which have been performing poorly, restaurants, and general goods stores. The majority of the shares will be sold to an outside party by February 2026, and the company will be removed from the list of subsidiaries. After that, the company will aim to list on the stock market. SVNDY Holdings will continue to hold a portion of York Holdings shares and keep it within the group as an equity method company. This is for a collaborative system in food development. Additionally, SVNDY Holdings announced its intention to change its company name to 7-Eleven Corporation. The reason for the change is to focus on the convenience store business, both in Japan and overseas. 7-Eleven Holdings is downsizing its supermarket business and concentrating on the Tokyo metropolitan area, and is focusing its management resources on the convenience store chain 7-Eleven. The company decided to change its name to reflect its focus on convenience stores and to grow globally. Dividends. For fiscal year 2024, annual dividend is 40 yen per share, 2 yen increase from previous year. 7-Eleven Holdings aims for a stable and progressive dividend policy, focusing on sustainable growth. Progressive dividend policy is a company's pledge to increase its dividend each year, at least in line with the increase in earnings per share. The company will not reduce the dividend if earnings per share fall. Progressive dividend policy is ideal for long-term holding. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 2,292 yen as of October 11th, and the US dollar stock price is $15.35 as of October 11th. Current PBR is 1.47, and PER is 36.5. Dividend yield is 1.75%. Compared to the last few years, PBR and dividend yield show that current index figures are about the same as before, but PER is relatively higher. Stock price has risen significantly after the takeover bid offer by Alimentation Couche-Tard announced, even though TOB is not confirmed yet. Conclusion. Stock price rose after announcement of TOB attempt by Alimentation Couche-Tard. Income decreased in first half, FY2024, and the company is facing many difficulties, but stock price remains high because of expectation for TOB. However, most likely stock price would fall if TOB was withdrawn. Future business performance is dependent on the outcome of structure reforms or TOB.